Right, jet setters. The US market is about to open in about 45 minutes. So I thought I'd do something just on the US markets. This is the daily on the futures, the S&P futures. The real market, as opposed to some people saying the cash market is just the real market, because you wouldn't believe it, but the futures actually combines the cash market, right? And it also combines the other 16, 17, 18 hours a day when the cash market doesn't trade. So the movements in it tell a far bigger picture of the price action. So you can see there's the whole move up's been technical on a whole lot of fronts. The big one is obviously this 50% move, retracement from, or extension, I guess the way you want to look at it, from the previous high to the low there. We can see the 23 retracement takes us back to a very strong psychological level, 4,000, and also takes us back to a gap here which was never filled. We can also see on here, if we just take the Fibonacci from this wave, it lines up with some pretty key technical levels, right? One of them, of course, is this 4,230-ish level, which is the bottom of this range here that was partially filled but never quite, right? Where the market has dipped down to the top of it, but hasn't really come down to have a good crack at that level. This, I'd say, is a very likely level for it to do a bit more work at. As I said, it's still unfolding down, and this looks a very likely next step. If it fails that one, then this is a very strong technical place for it to return to on a few reasons. One, it's a 38 retracement from this big leg here, and it is the 23 retracement on the whole move. Now the Elliott wave guys, they kind of count this differently, right? A lot of them is 1, 2, 3, we're in a 4, and then we're going to see a 5 up there, right? Now if that's the case, then one of the things that they will look at, I'm not a big believer in Elliott waves theory, but for those that are, they will look at this move here, and they'll say this move here was a 23. It was a shallow retracement. And in Elliott wave theory, they say, well, if you wave 2, which is normally a bigger retracement, if it was shallow, then you're looking at a bigger retracement on wave 4, right? So that's why they will be looking for a move to that 4,000 level, at least, if not lower. It's hard to count it anything differently as the 1, 2, 3, and this is a 4th wave. You couldn't really count as 1, 2, 3, 4, and 5. That doesn't work with the whole theory. As I said, not that I'm a big subscriber, but there's a lot of technical arguments for it to come back to this range in here. As we can say, this long-term trend is broken. It's done the high, high, low, high, 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 low, high, 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 low, lower high, but a high, 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 low, high, 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 low, high, 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 low, high, high, low, high, 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 low, high, 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 low, high, 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 low, high, 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 low, just high, 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 low, lower high, lower low, lower high, lower low, lower high. So when you get down into the detail of it, it is clearly a broken trend. So as far as where it's going to stop, the Elliott wave guys and the Fibonacci's and those who believe in filling gaps, this is the level in here. I guess another way to look at it is these trend lines can be very subjective as far as where you draw them. Okay, I remember looking at them back here, right? And kind of thinking, right, you look at it here going, well, that's a trend line. Oh no, this is the trend line. Oh no, that's it. This is it. That's it. And then you just move it as the market unfolds, which is part of the problem with technical analysis. It's always looking backwards. But this one, if it does form a new trend, long-term trend, then you really would be looking at this line here, right? Which is roughly at a stretch parallel to that, right? So that would be another place where people would look at it for it come to, which does take it down at least to do a bit more work in this first level, around about 4,250 level. So as I said, I think it's very likely that it's going to go do some more work down there. And if it breaks there, it's definitely going here. And as far as if it breaks there, that's probably a 50-50 chance on what happens with the Nasdaq and the 10-year yields at the moment. So if we go into a smaller time frame, just look at some of these key levels that I'm looking at. This is the 4-hourly. I do like trading off the 4-hourly. We can see that this level, 44.80, if it breaks that level in particular, then that really is a bit of game over for the bear market, for this bear move. If it breaks there, it's not totally over, but I would be surprised if it breaks there. And it held on Friday, maintaining both the trend down, maintaining the lower highs, and obviously maintaining the price action below that wave here. And as you can see, that level is quite critical, whereas both these levels where it's done a lot of work in here, struggled to get above it, but it got it. When it came through, it was a very strong move below. It did a lot of work. It's quite a strong move through it again, though. But then when it came down, it was a strong move down, strong move up, but it fought it, strong move down, right? So we've basically got like 3 strong moves down, 1 up, strong move up, right? And a lot of resistance and 1 rather non-convincing move through, and a rejection of that level. So this was a very important level for it to maintain, because obviously we saw resistance here, we saw the resistance bailout here, okay? We saw the resistance fight back here, and we saw the resistance really win there. So it kind of lost, or the resistance won, it lost, right? It was a bit of a draw, and it was a win, right? So that is quite a convincing level for it to stay below it, and that's what you need to read into the candles there. This one, again, the sellers were pretty convincing here. The buyers pretty convincing all the way through here, though. And so this one, the sellers haven't been that convincing, but you can see here when the sellers did break through, they really did stir the hornet's nest, right? Because the sellers, they won here, right? They kind of lost here, but they were fighting, but the buyers would not give up. They had another go here, but the buyers wouldn't give up. They had a go here, but the buyers wouldn't give up. And you can see this, right? It's the opposite of that, right? So we've got a lot of sellers who've been winning here, but we've got a lot of buyers who've been winning here. The buyers won, right? The buyers won. The buyers won. The buyers fought valiantly and they lost, but Jesus, they really fought back very hard. And so this test here today is going to be quite key, because we're going to see all this kerfuffle that happened here, right, is likely to come back through here. Because as you can see, in a lot of these movements, this zigzagging around here where the buyers fought and won. And the buyers, they fought and won. The sellers fought here and won. The buyers fought here and they lost, but as I said, they really dug in and they fought back. So it's going to be interesting to see what happens here. I'd expect that the buyers are going to really try and come back. All the work that was done here, they're not going to let that go unchallenged. And the next few sessions will be quite defining to see whether the buyers manage to turn this back and break up above this trend line and take it back here. And if they do that, then really the bear move is over. If the sellers kind of win here, then it's going to be interesting to see whether these guys are really going to stump up and go again. So that's what I'm seeing on the S&P. If we just go out to look at the weeklies, we can see again there's been a lot of fierce fighting of this move down. Okay, that's what those long wicks are, right? That's very determined fighting. So there is still a lot of belief in this market, even at this level where it's been at the pointy end of the season and where it's been significantly overbought. Okay, so that's, in a way, it's quite a, I hesitate to use the word desperate stand, but it is quite a strong stand at a very, if you're going to take a stand, it's at the very aggressive end of the spectrum to take a stand when you've had such a massive move up, where you've got some very strong technical levels calling for a retracement, where we haven't had a big retracement for quite some time, and you're overbought. Right? So that is quite a, I think it is quite a desperate scenario in terms of price action. When we look at the monthlies, this is very bearish on the monthlies. That's a big engulfing bear candle here. There was one there which kind of led it lower. There was obviously one there which led it lower. That wasn't an engulfing one. They don't come across that often. This was an engulfing one and kind of led to a fair bit of sideways action in here. These ones back in the GFC, there's some engulfing candles here. The big bearish engulfing ones, they don't happen that often, right? But they do cause damage. Right? That's back at the .com, right? They do cause damage when they do happen. See here, that was a big one, and it caused quite a sell-off. So that is a very big warning sign. So the resistance movement, shall we call it, right? They are really digging in at a point where on the monthlies it's saying, fighting that one, the odds are stacked against you very heavily. Right? On a weekly one, saying the fight's been gone for like 3 weeks now, possibly kind of 4 weeks. Okay, on the daily, they're going, you are really fighting in a key area of the battlefield through here, and then down on the 4 hourlies, we can see that it is very much shaping up to be a test of what happens between 44.30 and 43.80. 43.80 goes, we are down here at 42.80, and the momentum will be quite assertive, shall we say. Up here, there will be a rearguard action, I would say, around about 44.80. Now, don't forget that one thing that I've talked about in videos before is on these dates here, which is the 17th and 18th of each month, in May, in June, July, August, and September. Now, these dates are slightly out because it's a couple of weekends, and also these are Australian time zone ones. But on the 17th and 18th trading days, for the last 5 months, there's been a seller in the market. Now, these are not option expiry dates. These are, I'll bring up my little chart here that's got them. These are business days, right? And here they are, okay? And you can see on all these days, if we go down to the hourly, sorry about the mess here, people, right? But we can see that here, after this, there is this selling that goes on, and it is the 17th and 18th, and then the 19th, the next day, the 19th, it's over, and the seller's gone and the buyer's come back, right? Same here, this is kind of a weekend in here. That's the 17th and 18th trading days. The 20th, because the 19th was a weekend, it's back on. Same here and same here. Okay, so in all of these ones, there is selling that is happening. I suspect it's like it's a big fund, a big order that is been coming through and doing selling on those business days. Now, those business days are coming up in about a week. Right? So I'm going to revisit. I'll revisit these timings as we get closer to the date. So this one, that's like 11:30 at night on the 19th here. So that's the beginning of 19th trading day in the US. Here, same thing. Let's just tick it over. Right, midnight. That's when it starts. 11:30. It's daylight saving, whatever. So you can see this selling. It just gone and it starts coming back. Next day here, the same thing. Right. Okay. Oh yeah, that's right. Yeah, because it's the 18th and the 19th was the weekend. So it's the 20th that the selling was done, and then the 21st it comes back. Okay. And here, same thing, 17th and 18th, and then the 19th it comes back. Here, same thing, right? So on those dates, and it's the 17th and 18th business days, there has been, for the last 5 months, there's been selling on those days. The seller then disappears. And as I said, a month ago now, when I first talked about this one was going to be different, because when it kicked in, the market was already below some of these levels, it was right on the 20-day moving average, and it was going to cause some technical damage as it went through, which it did, and it's caused some repercussions. Okay, and it is made a bit of a toot you're in trouble pattern here, with obviously the way these patterns going to work, the midpoint, that then becomes a battle zone. So that's exactly what's been going on in the US markets. So this week, the next few days in particular, are going to be key to watch to see what happens in these zones. Just let me get all my lines back. Wrong chart. It is going to be very key to watch what happens in this zone in here. From the between 43.80 and 42.30. That's going to be very key to watch. We can see it's doing a little bit of work around there already, and we will see what happens. I'm still short the market here, and my stops will be, well, I might start trimming the position there or adding to it if I'm feeling ballsy, but by there I'm definitely out. My target is here and below. Look, that's it. Have a good week. Keep an eye on these levels. As I said, I hope this has been helpful. This is for education only. I'm not a financial advisor. If you're going to trade these markets, tread very carefully. You can dust a lot of cash. They are ridden with risk, and rightfully so. So take care. All right, ciao.